Hello there, traders. Hello. Welcome back to the TOGS Trading Podcast, TOGS 47. Today is all about building and evolving your trading system. How do you keep improving? So I think it's probably fair to say that a trading system isn't something you naturally finish. It's something you constantly work on and refine. The best traders know that markets change, conditions evolve, and so must their approach. So in this episode, ladies and gentlemen, we're going to explore how to keep improving your system without consistently chopping and changing the way you go about it. As always, I'm joined for our conversation by Big Ian there in Dublin. Looking good, Billy Ray. How are you doing?
Thank you very much. I'm okay. Can't complain at the moment. Sitting here watching my stream, watching a nice little double bottom start off. But we'll see how it's going to go. Apart from that, I'm absolutely fine.
I think everybody knows how much we love a double bottom, in every sense of the word, and we will. It is penciled in, okay, for one of our future sessions, just to look at and talk about double tops and double bottoms. But how's your week been otherwise?
It was all right. It was uneventful. There wasn't really that much happening with it. Trading was kind of meh a little bit. Like there wasn't any. It was every run of the mill. There's no setup I could actually sit here and remember doing, and there's no setup that I'd like to forget either at the same time. So, and you have weeks like that where it's just run of the mill stuff. You turn up, you do your job, and that's basically it. There was nothing exciting happened in it. There was nothing terrifying happened in it. There wasn't really that much. It was just another week that blends in with the rest of the weeks, because a lot of weeks you have like some occasion, something happens during the week that you remember, like you have either an especially good setup or an especially bad setup or something, but not last week. And then privately it was just a run of the mill week. There was nothing too much happening. So yeah, uneventful would be I could have summed it up if I just said uneventful, I think.
Yeah. Well, so of course we're recording this on the Wednesday on FOMC day, all right. So of course the world and his wife will be watching Mr. Powell this evening, and pretty much everybody's expecting and baked in that 0.25% interest rate cut. But of course, in the last few days, maybe even the last week, you'd probably say is that those kind of markets, some of those markets that people would normally associate with trading in the run up to the kind of to the Fed meeting, they have been they've either been a little bit dull, or there's basically been a bit of a divergence between what people expect to happen and what has carried on. Certainly for myself this week, I have noticed sterling has become more volatile this week. Okay, sort of Monday, Tuesday, even not so much this morning, surprisingly. After the CPI numbers, but yeah, I know sort of certainly Monday, Tuesday is kind of as people have come to the desk. People know there's a lot of UK data coming out this week, and people are starting to engage with those markets. So perhaps what we'll see after the Fed tonight is that maybe we'll start to see things waking up once everybody's just basically got it out of the way, and then they get on with it. But of course, that kind of brings us to for our session today. Just before we go on, just a reminder: the next one is TOGS 48, which is about boredom, excitement, and the trader's mindset. So we'll be able to talk about that plenty. But today we want to talk about building and evolving your trading system. How do you keep improving? Now, I appreciate that in itself is quite a broad title. We could talk for days about that, couldn't we, Ian? It's not that's not a difficult topic to talk about. So what we're probably going to do is we're going to focus on our own personal experiences of building and evolving trading systems, and what you need to do to talk about keep improving. I said it won't be let's say the end piece on it. There's always plenty to add, but hopefully sharing our own experiences will help you in yourselves and stuff in terms of as you work upon it. So when it comes to building and evolving your trading system, all right, maybe a good place to talk, Ian, is about some of the sort of common mistakes that actually people make when it comes to building trading systems. What are your views on those?
Well, the first thing I think they do when you start off first is they don't read widely enough, so they don't build a basic sound knowledge. And I think unless you have like a good sound knowledge of trading, it's very hard to build anything, really, to be quite honest. So that's the first thing I'd say with them is that when you're starting off first, read widely. until you start seeing things that make sense to you or start seeing things that you like. I think following gurus too quickly is another big problem with that, because the gurus that you get at the beginning, or the people that you follow at the beginning, will quite influence your trading over the next couple of years and the direction you take. And unless you've read widely, unless you have some experience in it, it's actually really hard to pick a guru or pick somebody that you want to follow or somebody you want to learn from, because you just don't simply have the knowledge. It's even if they were all good, picking the one that might work for you is actually quite difficult.
Don't know what you don't know.
Yeah, I think people also as well, when they start off, one of the biggest things I see when they start off is that they take on too many. They start their war on too many fronts. So a very typical thing that newer traders say is that I want to do I want to do swing trading, and then I want to day trade while I'm waiting for swing trades, which is a bit like I want to invade France and Russia at the same time. It just doesn't. It's kind of stupid. Like, you only have to win one place, and then you can do the other place. So it's
your German influence coming through there, Ian. I think.
Ja, genau. Das ist richtig. Ich spreche sehr gutes Deutsch. So I think that people sit there and they want to do everything. And I think what you need to do is you need to start off, and you need to. The first thing I think anybody should do is look at the daily chart and learn the daily chart, because every part of trading, in some way, it comes back to the daily chart. Even if you're scalping, what you're doing is scalping the needs of a daily chart, but just on a very quick time frame. So if the daily chart needs to do a breakout, for instance, or hold a support line, then the resulting scalps are probably going to be all longs. So there's quite so that's what I think is a thing that they don't tend to is that they tend to look too broadly and try to do too many things at the same time. And you only have to beat the market in one place to make a fortune. That's the whole thing. If you're the world's greatest day trader, you're going to make a fortune. If you're the world's greatest swing trader, you're going to make a fortune, probably a bigger fortune, but you're still going to make a fortune. I think they have to reinvent the wheel.
Yeah. Yeah.
They have to come up with some special new combination of indicators or technical analysis or something else that's span new, never been seen before, and they're going to beat the market on that. And the thing is that if technical analysis was so good, that this would be relatively easy. As technical analysis is a huge part of trading, but it's not the actual bit that makes the money. It's you that makes the money. So it's the psychology, the person who's trading the thing. Like, I trade loads of double bottoms, for instance, and that's an old system. It's just that I trade it well because my psychology is suited to trading that. Or fib systems, the basic traditional fib, the 618 and the 50, that's around since 1928. So you're not having to reinvent something. You can take something that's already in the market. You just have to learn how to do it properly. And that's the last thing I say about that is that's a problem as well. I see with newer traders is that they think they can learn this TA heavy setup that when the third constellation of the moon is in the certain place and the indicator is at the low and the other indicator is at the high and whatever it is, that it's going to be a cash machine, that they're going to end up with, that vaunted 7 wins and 3 losses.
Yep.
And they just have to press a button when they see those 3 things, tick, 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 press a button and off we go. And that's not how trading works. That's not how the market works. That's not, and it's just a false premise. And I think an awful lot of that is also because people who are selling courses encourage that type of thinking because it makes it all accessible and it makes it all look doable. If you can come to me and I can sit down and I can show you how to draw the perfect setup, and then you take that away and you make a fortune from it. That's not going to work, because no system is perfect, and they all undergo weird strings of losses and and suddenly you're set up. I had setups from years ago that don't work anymore. They just simply don't work. Because the market changes its character, and people in the market, who's in the market at the time, changes the character, who algorithms change what they're doing, lots of things. So that's basically the start of that.
Yeah. No, you're right. In terms of common mistakes that people make is that they try to be all things to all people, in terms of, as you say, they want to trade monthly charts, they want to trade daily charts, want to trade 4-hourly charts, and then they also want to scalp on like 5 and 1 minute charts, etc. and stuff, trying to be all things to all people. And I'm not saying that isn't feasible at a point in your career later on, but really, to begin with, you want to just be doing one thing well. And part of that is about knowing yourself, and also about developing your own method. System hopping goes on far, far too much. Okay, as you were saying, speak to a guru, follow learn a new setup or a new method, follow it for about 6 or 7 trades. It has a couple of losses, as every method does, and then basically it frightens them out of it, and then the journey begins. It's like a dog chasing the tail, just literally system hopping, system hopping, system hopping. The reality is that in building your own method, as you said, you do have to learn. You have to learn lots of different methods, and then what will happen is you will start to see the particular methods or the particular ways of engaging with markets that resonate with you, and it will be different for everybody, and it'll be different for different reasons. And just because it does resonate with you doesn't actually mean that it is it's a successful way necessarily. But for whatever reason, at whatever level, it resonates with you, and you're probably best to basically to focus upon that, and then look to start to refine that. So I will say normally people start to have sustained success when they meld a few of the kind of concepts and ideas that they've learned and melded it into their own particular method. And there's no there's no kind of shortcut to that, really. It comes down to you basically doing the learning, doing the working, basically keeping great data on everything. All right, keeping great data so you actually have some data to make decent choices of, not just you making knee-jerk impulsive decisions based on a bit of recency bias that your last couple of trades won, so you think this is fabulous, and you overtrade it, or the last couple of setups failed, which means that that model is useless and doesn't particularly work. So as you said, there's system hopping, then over optimizing. Okay, I see an awful lot of people doing that. All right, they literally they get a method, and then they go to the opposite end in terms of like wanting to meld ideas. Then they go to the other extreme, which is basically just constantly over optimizing every little bit in the hope that basically they can avoid losing trades, and that doesn't really work. You need to basically have a method, have an idea. Does this dog hunt? And the only way you find that out is basically employing it in the market, and then collecting all of that feedback, and then off the data, off the feedback, start to basically be able to twist and refine it. And when I talk about refine, I talk about basically less is more. I have been as guilty as the next person in the past of adding additional layers of complexity to my methods, and actually that rarely helps. If anything, these days, what I'm always looking to do is, what can I take away? Is there anything that allows me to make the decision and enact my edge, but actually takes less from me in terms of there's less elements, there's less layers of complexity? Because I've just found that a simple plan executed well gets you 80% of the way to your target normally. That doesn't matter whether you're trading or leading a sales team or running a business or running a war, or basically working in a hospital ward and stuff. A simple plan executed well, 8% of the time gets you towards where you need to be, and that's good enough. That's good enough for myself. But adding layers of complexity, that is what lots of people do at the start, isn't it? They think that's what's helping them, but actually it's hindering them, isn't it?
Complexity. One of the big problems with complexity or complex setups is there is confusion, and they tend to have opposing signals. So if you have 7 indicators on your chart, three of them will say one thing and four of them will say the other, and that's just opposing, and that I think leads to a huge big problem with it. The reason that people tend to want to have these complex setups is it's an attempt to minimize risk, and that's what they're basically trying to do. They're trying to get over their fear part of it by introducing, to think they are. They're trying to get over the fear part of it by introducing some sort of certainty into the system, and also they're trying to put in, along with the certainty, if it's a really super mechanical system, then and that they have no choice but to enter or exit a trade, then they also again don't have to be afraid. The decision is pre-made for them, and I think that causes that's one of the big downsides of complexity. I think for myself, I never got anywhere until I committed to one time frame and one style to do one thing. So I started off. That it doesn't mean that over the years I haven't added things in. I haven't learned like lots of other trading styles or from other traders or bits and pieces. That doesn't mean that, but I had to first of all commit to doing one thing well.
Yeah.
And knowing it inside out. And until I did that, there was no moving forward, because as you said, like you go in, you do something, you try it 6 times or 7 times, it wouldn't work, and then you were off to the next thing on this big rail search for the perfect and better indicator, signal, setup, whatever it was. I think people think as well when they start off, they think that they have no idea the time it's going to take, and I didn't. I remember talking to what I thought was a pro trader. It turned out to be not. And he was telling me a year, like that's what he said, was a year, that it would take me a year to get profitable. And sure, then I ran off in the first, thinking that that's all it was going to take. That I was going to sit down, buy a book on technical analysis, spend an entire year learning this, and that just wasn't a realistic thing. I think as well, people minimize the idea of how much psychology that they have to do and how much work they have to do on themselves. There's really that know thyself is the greatest component of trading, because again, technical analysis will not win for you in the end. It's you that's going to win, and you have to find areas of fear. You have to, and widely, it's not just trading psychology, it's wider psychology, because there are things in you that is going to hold you up, that you have faulty beliefs. You have beliefs around money, for instance. Everybody has a belief around money or a belief around success, and as I said before, success can be terrifying, because success puts you in it changes your identity, and those are all things that you because that's one of the things that happens when you become a trader. Your identity changes. Your understanding of who you are changes, because now you are somebody else. And I've forgotten the last thing I was going to say. It'll come to me in a minute. Basically, so I shall hand it back to you for.
There is an element of that. There's internal behavior modification that is required, which people probably don't talk about anywhere near enough. I would agree with you that basically technical analysis is just a decision-making framework. All right, it's just a decision-making framework. It's just giving an idea that that this would be a good idea to either buy here or sell it. That doesn't actually make for a winning trade, because if you could be a great analyst, but if you can't monetize your ideas properly, well then you're an idiot. You could be the best technical analyst in the world, but if your trade management involves you risking £1,000 to make £200, well then it doesn't matter how good your analyst is. Your risk management, your trade management, your monetization of the idea is woeful, and you won't last long as a trader. So it is all elements of building a system, right? That's why I constantly go on about the 4 M's of trading: markets, method, money, and myself, because actually your system has to encompass all 4 of those elements. You need to understand the context of the market. You need to have a method that fits the context of the market. It's no use it's no use having the best trend following system in the world if markets are range bound, right? It doesn't matter. You need to have money management in place so that you are in a position to live to fight another day, okay, and that you have asymmetric reward to risk to put the probabilities in your favor, and then managing myself, all right, making sure that it is a system that you can consistently execute, not for the next 5 trades, but for the next 200 trades, because that's actually the kind of data you probably need to get under your belt to really truly understand that method, refine it, and also embody it into yourself as about doing it. The Mark Douglas in Trading the Zone. If you finish that book, at the end of it, he gives you an exercise to do, which is about just basically, I think it's like trading an early morning breakout, and he says, do it for 20 times, etc., to test. And he said, and the late great Dr. David Paul, a man I'm privileged to have called like both a mentor and a friend, is that he tried to do the same thing with students and stuff, is that get them to sort of trade just one mechanical method for 20 trades, and after 7, 8, 9, most people did it. So I forced myself to do the same thing for 250. All right, I basically made myself do it, and it was unbelievably painful at times, absolutely unbelievably painful at times, because you could have streaks of 4, 5, 6 losing trades on a trot. But next day you get up, you put the trade on, you do it, and you almost have to overcome your own senses. You have to it's like breaking in a new horse. You have to break that egotistical need to be right, need to think that what's going to happen next, and you have to do it. And I won't say it was a pretty or painless experience. It wasn't, but that was part of the myself bit of managing myself as I kind of developed as a trader, along with money management, understanding the right method for me, and then also understand the context of the market. Okay, making sure that my method actually fit into the right market context, because I think people sometimes put method and market in the same bubble, and I've always said that I think you need to break them out. You need to understand the context of the market, which is what your technical analysis is for. But then you also need to ensure that your method suits the particular market context that we find ourselves at the moment.
Yeah. I was just thinking when you're saying that technical analysis, what I wrote down for that was that it only organizes your decision. That's all it really does. It just helps you organize what you're going to do. It doesn't. Technical analysis doesn't really influence the market in some ways. It does and it doesn't. I should really nearly do a podcast just on that one statement. I'm a better analyst than trader is a really common thing to hear in the market. In fact, there was one woman I started following when I started off who was doing Fibonacci setups. And she used to say that all the time, when she was in, she'd go out and she went with her 4 or 5 setups every day or every second day, whatever it was. And then say I'm a better analyst than I am trader. And it took me years to understand what she was talking about, where basically she was talking that she had a lot of fear. She did not trust her own setups. She did not trust herself, and she didn't want to live in that sort of stressful environment of trading. And so I was happy to say that she was a better analyst than trader. And in fact, I've said it myself at times. I know that I did wrote a journal thing a long time ago, where I wrote that into it, that said that I was a better analyst at that time than I was a trader. A better trader now than I am an analyst, because the analysis has got less as I've moved on in trading, where I need less things, because at the end of the day, all I'm doing is making one decision, which is the market going to go up, go down, or go sideways? And after that, the rest of it, and that's not the most complex thing in the world to work out. Doing what you're saying with doing like 20 trades, the same 20 trades, doing the mechanical fashion, everyone struggles with that. I think it's one of the, when you're mentoring somebody, it's one of the real annoying things about mentoring somebody, is that you'd set them an exercise to do this particular thing 20 times. It's real wax on, wax off,
Yeah, it is.
And they won't do it. They won't do it even on a simulated account. They won't do it because they'll add something, because they get bored, and they'll add something into it. They'll do it. You said do it 20 times, they'll do it 9 times, because it's
Yeah.
boring. When it's on a sim account, it's quite boring. They don't seem to realize that as they start to think that they can do it through back testing, which I'm a real. I don't like back testing. Back testing is a very necessary thing that you have to do in the market. It is a bedrock of building anything, working on any idea, but it's really limited. I think that it's a much more limited thing than people, because it doesn't show it doesn't show fake signals. Because if you were doing a moving average cross, that we say that was part of your setup, is that you're going to have your moving averages will cross and then uncross, and then when the chart is closed, they're either crossed or uncrossed. So there isn't the fake signal. It doesn't show your reaction to your signals, and that's a huge thing. Because one of the things that I find with you get somebody and they're doing their setup, and they've done a lot of the work, they've done all the work, and they're ready to go live with the setup. And then how they react is subtly different. It's tiny. They're a little bit slower to enter. They're a little bit slower to exit. They're a little bit tighter with their stop. There's some subtle difference between what they do when they're live than they do when they're on a simulator, and that causes their setup to fail. And one of the things that I've seen an awful lot with, and one of the things I would be a good proponent of doing, is that you take a certain amount of money, you go live with that certain amount of money, and when that certain amount of money is gone, and should be a small amount of money, you go back to the sim and work out, and then you sit, because you have to go back and over several times. And then you work out what are you doing differently between live and simulated, because that's 90% of the time. There's that roughness. There's the transition from simulated to live is so emotionally different that it is actually quite a difficult transition to make. And I think that you don't have to put pressure on yourself and say, "Oh, I'm a live trader now." There is a point for this, but the first few times that you go live with something, you don't have to stay. In my opinion, you don't have to stay live if it's not working for you. If your psychology is suffering and you can't, and it's not going well, take a step back, go back to your simulation thing, work it all out again, get ready again, have a little rest, psychological rest, and then off you go. Take another 200. What I used to do is take $200, and that $200 was my loss limit when I was going live. And then when I lost that $200, I had to go back to the simulator, because if I didn't go back to the simulator, I could just keep doing the same thing in spiral, and I wasn't learning anything. I wasn't learning anything more by doing the same thing wrong again and again and again. Because a lot of the time, these differences are so subtle that you don't know what you're actually doing. And I think that it takes a little bit of time to work that out. Basically.
No, I'd agree with you in that. Lots of people talk about back testing being some sort of panacea. It is important and it will help you, but it is not the be all and end all that people think it is. As I said earlier, it's there to give me an idea. Can this system hunt? Or does this dog hunt? Has it given me enough to give me an indication that, actually, there might be something in here? And then you have to employ it, and you have to employ it on live, as you said, just on a small account. I've got a couple of just testing accounts, and you have to employ it, and you have to get, as I said, 50, 100, 200 trades under your belts to basically, A, does the method work, and B, can you execute it? You could have the most perfect system in the world, but if you can't execute it, well, then it's pretty pointless, isn't it? So back testing is important, but it is not the panacea, and it should be part of a process that takes you from, as part of your kind of idea development, testing it, employing it, refining it, and then working with it. So yeah. There's probably lots of stuff there that we've talked about in terms of mistakes, all right, that traders make, and we've made plenty of them, haven't we? We have made plenty of them, but
absolutely,
kind of comes back to that kind of system hopping, over optimizing, adding complexity, and also I'd sort of talk about ignoring feedback. Lots of people will ignore feedback because they think they put all that work and effort into developing a system, and they don't want to hear or see that it isn't actually working. A lot of the ideas that you will test won't work, and lots of people sort of get a bit fed up and a bit frustrated, and I get it. But actually, what I always try and say is that the kernel of your next system might be one little element of this system that you've been testing. It might not be the whole system is flawed. There might be one or two little parts of it that actually are useful and beneficial, and it's almost like a phoenix rising from the flames, that out of one failed idea, you might actually get the kernel of your next trading idea for your next trading system out of it. Hence why making sure that you keep all the data and that you do your reviews, okay, and work through the feedback can help you enormously. So in terms of those are some of the mistakes. If there's kind of key principles we want to basically sort of to say so that people can take away elements from it, I'll be saying keep it simple. Have the ability to adapt to market conditions because they will change. Test, all right, before you change everything. And maybe we'll talk a little bit more about that in a minute as well. And most importantly, just document everything. You have to just document everything, aren't you? Anything else you'd add to that in terms of principles that?
Well, one of the things I was just thinking there with the testing thing of it, like I have a spread betting account for testing, and I love spread betting for testing because if you can make it in spread betting, you can make it anywhere. Because it's so aggressively bad. And the thing I would say as well is that when I started that account, I put in €2,000 and now there's 500 in it because it's a testing account. It's for testing ideas, and most of those ideas do not work, and most of those ideas will end up being junk. So I paid €1,500 to test ideas. Oof, big deal. It's just part of my business cost. I think that people look for perfectionism, and that's such a huge big thing with them, and perfection doesn't exist. Is as good enough, and that's about as good as you're going to get in trading.
Guilty.
Self-forgiveness is, I also think, is a huge thing, because what ends up with a lot of people think with anything else, you can kind of bully yourself for a certain length of time to achieve something. So you have an exam coming up at the weekend, next week or something, and then you can sit down and you can bully yourself through long enough that you'll get through that exam. You'll do whatever you need to do in the period of time to pass your exam or to perform as well as you can in that exam. But you can't do that with trading because it's a longer term job. So self-talk becomes critical to survival, because if you're sitting there, your sense of self, your sense of worth, your ego, your happiness all becomes dependent on the idea that you have to be able to do one thing, which is make money. In the stock market, you're going to suffer. You're going to have a lot of problems because you are not. The stock market in itself is relatively random in some ways. Some days you get paid a huge amount of money. Some days you get paid no money. Some days it takes some money. And how you earn, even if you're a good trader, how you earn is not, it's not a fine line. It's not a wage. So you can't put your ego on that type of that type of random return, because it's just going to hurt you at the end of the day. And I think that the other thing too is that you're always going to make mistakes in the stock market. You're always going to make mistakes trading. You're going to miss opportunities. Things are going to go wrong for you. And if you haven't got the ability to be radically self-forgiving, then you're going to have a problem. As long as you can trust that you are doing the best for yourself that you can possibly do, and that you're genuinely committed to what you're doing, then you can forgive yourself. And once you can forgive yourself for all of those mistakes and all those things going wrong, you can survive over the long term. Because trading, if you take up trading and if you're serious about trading, in 10 years' time, you'll still be trading. In 10 years' time, you'll probably not be making the life-changing money. That's another thing as well, is life-changing money takes a long time to come. And people seem to think that there's switch or something that switches on. You trade for a certain length of time, you become consistent, and then the market then showers cash on you. You've switched on the ATM, and that's not what happens. It takes a long time to build up to, because you have to build the account to make the bigger trades. That's one thing. If you're living from trading, you are taking money out all the time. And that's a problem, because that puts a cap on your, if you have a $50,000 account, and we say you're doing 100% a year, you're an elite trader, but it's going to cost you probably 55,000 to live for the year. So it's not to make life-changing money takes a lot of work and a certain amount of luck. And it's not that it doesn't happen. It will happen if you get good enough and you get some luck. There's a little bit of element of luck in that, but doesn't happen overnight. It's not. You don't wake up consistent one morning and then suddenly, you go from 1 week making $200 to making 10,000 by the end of the week. That's not how it works. It's a slow build up. It's one of the reasons as well why people should not leave their jobs too soon, because you're better off to be trading, even if you're trading part time and you're doing really well at it. At least it gives your account time to build up. I mean, it's much easier if you have $1 million account and you make 10% in a year. You can live on that. There's no problem living on that. If you have a $10,000 account and you're making 200% a year, you're not gonna trade on that. So kindness to yourself will be working a little bit longer, building up a bigger account, and then having that less pressure on yourself to make huge returns, because to consistently make 200 or 300 percent returns is it's a lot of pressure. Bloody harder than most jobs, so with that.
Yeah, I agree with you in terms of that. The vast majority of private traders are undercapitalized for their goals and objectives, and that in itself can destroy what would otherwise be a good trading system, because basically there are external drivers that force traders to take on too much risk or to overtrade, over leverage, etc., and that comes back to bite them in the backside. And so putting yourself in a position where you are not under that stress and pressure will help you enormously. All right, will help you enormously. That you want to be able to sit down and trade for opportunity, not to trade to make the rent money, because whilst you can do that, the ability to do that consistently every month will mentally shred you. Right, it'll mentally shred you. So make the game as easy as you possibly can for yourself. There's no need to make it any harder than it needs to be. So I suppose really, because as I said, we could talk about this for hours and days and stuff, and we're just talking about our experiences. But if we kind of sort of look to think about drawing to a close in terms of what people can I take away from from our conversations and from our own experiences and such. And as I said, I've tried to start to build like a little kind of like a little bit of follow-up material, follow-up piece, okay, like one page and stuff based on what we talk about here, just to help people, because I appreciate that I might listen to the podcast, but I actually forget some of the kind of salient points and stuff and what have you. So what I'd be talking about in terms of practical ways you can start to help yourself is basically schedule regular reviews. And I don't necessarily mean just like a debrief of your trades. That's separate. I'm talking about actually schedule a regular review of actually how you're conducting your operations, all right, and how you are employing your system. Does it match and meet the present market conditions that you find yourself? Also, if you are going to be working on evolving and improving your system, just focus on one variable at a time. Now, I do realise that this can then sometimes lead to a game of whack-a-mole as you focus on one little piece of your trading system. You think you've got that covered, and then basically another challenge pops up somewhere else. So I do appreciate that sometimes it can feel like it lead to a game of whack-a-mole, but it is just sometimes focusing on one variable and working on improving that slowly but surely. And then basically sort of being able to merge or meld your data with your own lived experience as a trader. So once again, that means that you could have the best system in the world, but if you can't, if you can't execute it flawlessly, if it puts you under huge, immense, stress and pressure to do it, then it's probably not the method. It's probably not the method for you. Okay, and so being able to sort of marry those two elements, okay, of good data, good system, and your ability to execute is unbelievably important. How about yourself? What kind of practical ways would you suggest to people to take away and stuff in terms of to help them keep working on and improving their trading systems here?
Find it. That's one of the big key things, because what I find an awful lot of the time, oh God, I had one fellow mentors, and he would start talking about the setup, and then he'd say, and the rest, so it'd be so, oh, I see a double bottom, and then I do the rest, and but just turned out he had no definition of what he was doing. There was no defining, because you can't improve what you can't write down.
Yeah.
That's just a thing with it, and I find that an awful lot of guys just simply, and I have been guilty of it myself from time to time, don't define their setup well enough, and then that's the first thing I would say with them, is that you have to keep a list. It literally starts off by buying a writing pad and a list, and make lists of what you should do in certain situations. And at the beginning, because the thing is that lasts for a certain period of time. That is a step on the way, because after a while you grow a certain amount of intuition in the market, and I think that's when things really start to change. But it's the wax on, wax off again. You have to do these slow, boring steps, like define your setup, trade your setup exactly 20, 100 times. I think 100 is a nice round number, and you have an idea of what you're doing. Record keeping, boring. Actually, it's just by accident. I have loads of records there someplace of a happening in one thing that I saw in the market, and I sat down and I back tested it, and then I got 200 examples of it to see what the thing was, and the idea turned out that the amount of times it failed were just slightly less than the amount of times it succeeded, and it wasn't worth pursuing any further than that. But do boring work.
Yeah, you do boring work. Welcome to the work. That's what it is, isn't it? Welcome to the work.
If you're not bored 50% of the time when you're doing your trading, you're probably doing something wrong.
Yeah, good point. Good point. Brilliant. All right. Thanks for that, Ian. So just before we draw to a close, just a reminder, TOGS 48 will be about boredom, excitement, and the trader's mindset. All right. So once again, plenty for us to talk about there. As always, listen, we really appreciate people's comments and likes, and subscribing to the to the YouTube channel, or even just the likes on Spotify and Apple, etc. We get messages elsewhere. We do really appreciate it. It's really great. It really helps us to hear that you're finding it particularly useful and stuff. So yeah, just to finish off, just remember that a trading system, it's a living framework. Okay, it's never truly a finished product. And if you're patient, disciplined, and systematic, okay, in how you improve it, your system will evolve with the markets, and your edge should grow with that, and should grow stronger over time. So. As always, thanks very much for listening to the end. Ian, thanks very much for joining us. And everybody, have a great trading week. And we'll look forward to speaking to you soon on TOGS 48. Trade well, everybody. Cheers.
Bye.